There's actually a decent amount of people here. We saw a lot of people in line at Target and Walmart early this morning. So, it's clear that the consumer wants to come back to stores, and we're seeing them out this morning.
Sarah, you better call him out that there's like one person behind him right now. As he says, there's a lot of people.
Well, his shot is very tight, so I couldn't see how much traffic there actually was. So Simeon, what are the sort of, I think you were at a mall as well, right? Even though you're making fun of your colleague. What are the sort of things you're looking at in terms of prices and traffic, and what makes this year different?
So I call it a friend more than a colleague. But listen, I think at the end of the day, the mornings, which we're so used to, probably don't matter as much. And I think that you walk through it. If you're there at 7 o'clock, there's no one at all. So it feels like, listen, not that this is going to matter a whole lot to the stock, but it feels like there's lines outside Lulu. There's some lines outside Apple. But the lines that you normally see outside the teen retailers and the people like the shoe companies, they just don't exist. And whether that's because of what you just brought up, you can shop yesterday, or whether that's because we're in a different mindset, I think it's a very different perspective on we need to run in their stampedes and grab something or it's going to be gone.
Yeah, we're not seeing the doorbusters that we've seen in the past. And maybe that's probably a good thing. We're still dealing with COVID, right? We don't want the crowd. So Ed, how do you determine which stocks, which companies are doing the best to recommend right now with traffic kind of vague, given the bifurcation here with online spending?
Right now we like companies that have very specific catalysts, like a Target, where they've had some massive inventory problems and are in the process of clearing that through. We like players like a Nordstrom because the high-end consumer has been more insulated, I think, in this environment. But, clearly you have to be selective. The consumer is pulling back in a lot of areas. Interestingly, we saw a lot of people buying luggage today. So to Simeon's point, clearly the travel experiential might still be the thing for holiday.
But haven't we seen weakness? Isn't the notable weakness, Ed, from places like a Nordstrom, Kohl's, or Target as far as October and November trends?
It was interesting. Last week, Nordstrom called out that actually the end of November, mid to end of November got better. It seems like with cooler weather, we're seeing more interest in apparel. The other thing I would add is that, it's more the entry price point where you're seeing the weakness and not really the true high end.
Simeon, what about you? One of your strategies, I know, for picking winners has been who is able to maintain price and profitability in an increasingly promotional environment. Who is that?
Yeah, so I've been talking to a lot of friends in the business, and I think right now people are scrambling. And I think there are companies that are going to win because of all the excess inventory, and that's a TJX. That's the one that's going to be able to benefit. And then I think there are companies that are going to be able to benefit in spite of all the excess inventory, and that's a Capri. You and I have talked about a lot how Michael Kors is explicitly stating they're not going to promote. I think the ones in the middle, the companies that are just pulling the ripcord because there's a lot of inventory, I worry they're just giving back all the brand equity that they earned over the last 2 years. Since 2008, you and I have been talking about Capri. So Michael Kors, I think, is a perfect example of a company. Oh, sorry. They're the ones that are holding line. I think if you look across the mall, most others are promoting. So most of the teen retailers are. And so when I look at that, I just think that if you can maintain this pricing power and you can weather it from a balance sheet, just giving away things to clear is not the right strategy right now.
The other big theme in the consumer that you both have talked about and everybody has paid attention to is the split, and we've heard it from companies, between the low-end consumer and the high-end, the income levels, and how inflation is really hurting the lower end even more. Ed, is the high-end also starting to see weakness on the fact that everything is costing more in our lives?
Less, I think, pressure from inflation, but one thing we worry about with the high end is it's very leveraged to asset markets, right? The high-end consumer is less about can they spend, but do they feel comfortable spending? So clearly the stock market, real estate prices are not helpful to that high-end consumer. Again, we're starting to see very early signs. That's something we're going to watch pretty closely through the holiday and then clearly into 23.
Does it impact your view on some of the names that are more exposed? Nordstrom is higher end consumer, isn't it? And Ralph Lauren is doing really well today, but I feel like that's been a barometer for luxury too, and it's held up very well.
Luxury broadly has held up very well. Nordstrom inventory is actually one of the better in the space. But yeah, I think it's something we're going to have to watch closely in 23 because this high-end consumer has been much more resilient than we would have expected coming into the year.
But Sarah,
what about you, Simeon? Yeah.
Yeah, so I think that point's important. I think we're seeing a huge. I know the high versus low income story is a very easy narrative to jump onto, and obviously inflation hurts low income more. But I think at the end of the day, what we're seeing, to your point about Nordstrom and Ralph, is that it's more of a product discrepancy than it is a high income discrepancy. Company that the three of us have all talked about a lot, Peloton. I hate to say it, but the stores were empty.